Ugh, Tesla stock down almost 4% yet again today. Ladies and gentlemen, we need to talk because this is not good. It's getting worse and worse by the day. Is it time to full on panic? Is it time to buy? Is Tesla stock going lower? And really, why is Tesla stock down another 4% today? And unfortunately, on a technical basis, things do not look great for Tesla. And I think we need to go over that as well. We're going to take a look at the option activity from hedge funds and institutions. As I went over yesterday, you did see a lot of selling of puts, which does suggest maybe a bottom is coming soon. Like when I say a lot of selling of puts, like $4 billion, about half of that. So $2 billion was likely selling of puts, which last time that happened, Tesla stock rallied 37%. Is that going to happen this time around? Well, I don't know, but we do have a bit of a problem on our hands. Tesla stock is down almost 35% just since the start of 2024. That's insane. I think if you asked Elon and the Tesla team if not giving guidance would have caused this, or if they would have expected this kind of decline in Tesla, and I think they would have said no. I think everyone's just as, I guess, shocked, maybe disappointed as you are. I don't think the Tesla team even expected to see anything close to the decline that we're seeing in Tesla stock, because let's be honest, what we've actually seen on the ground is not bad, right? The Chinese New Year, sure, that pushed into February, that slowed down things in February, but let's be honest, I mean, things are going okay for Tesla. It just looks like there's a lot of fear in the equity itself. And it also does not help that Tesla is probably the most interest rate sensitive company that you're going to find out there, period, because Tesla is a growing company. They're investing in their business. If they needed to raise capital, they wanted to, raise some bonds, that would obviously cost more because rates are higher. But the bottom line is basically everyone finances a vehicle. About 80-85% of buyers, more specifically, but that's basically everyone. That's most of your clientele, if you will, that finances a vehicle. When costs have gone so high for monthly payments to finance vehicles, Tesla's had to keep dropping prices. And the data that we have gotten so far in 2024, including today, is just not good. And in my personal opinion, with Tesla's 35% decline, this almost looks like it's paving the way for markets to go lower. I guess maybe a better way to put it is Tesla's leading the way down. Tesla is reacting first, whereas the markets are still kind of doing their own thing. But I think Tesla's a pretty good indicator that things are going to get a lot worse in our markets. See, it's kind of crazy. Every single inflation report we have gotten, whether it's CPI, PPI, PCE, or anything else so far in 2024, has been bad. They've all come in higher than expected. There hasn't been one report that has came in good. Including today, PPI month over month came in at 0.6%. The estimate was 0.3%. So you came in more than 2 standard deviations higher than the expectation from Wall Street. That's crazy. That's just ridiculous. Now, PPI tends to translate into PCE pretty closely. And I mean, it doesn't even matter, in my opinion, what you're seeing from equity markets right now. I think you can really tell how bad this is in the bond market. 10-year treasury yields have been climbing pretty much all day. You're now up about 11 basis points. But if you take a look at TLT is just continuing to get smashed, down about 1.5%, which if you guys follow TLT, if you know what TLT is, I mean, a 1.5% decline on TLT is bad. Okay. Now, the problem really is, I think, for stocks in general, I guess this is the problem. This is my opinion. This is a problem. Okay. The markets have a different opinion. And I think it's up to you to come to your own conclusion. But the markets are saying so far in 2024, they're like, it doesn't even matter. Inflation's rising again. PPI's coming in hot. CPI, PCE, forget it. The Fed's going to be cutting rates in 2024 regardless. That's kind of the narrative. We went for pricing in 7 or 8 cuts to start 2024. Now we're only pricing in about 2.5 rate cuts. What if I told you with this data that we're getting, the bond market's basically saying we may not get any rate cuts at all? There's a good chance that that's the ultimate outcome. And if we don't get any rate cuts in 2024, if the Fed signals, maybe there's a chance that they actually have to raise rates. A lot of Wall Street guys that I actually do respect, like Josh Brown, says if the Fed even hints at raising rates again, that could be a circuit breaker event in the markets. The last circuit breaker event you had was the crash of the Rona back in March. That is when the markets fall 7% in a single day and they halt the entire market for 15 minutes. Okay, that's the kind of downside you could be looking at if the Fed does indicate or hint to the markets that you're potentially going to get another rate hike. I think at this point, the Fed has no choice but to stay optional with their path ahead in policy. I don't think the Fed expected all these inflation reports to come in as hot as they are. And the Fed really doesn't want to back themselves into a corner. So I do think we are on crash watch. I think if the markets continue to hold up this well heading into next week's Fed event, you have a big problem on your hands. Because again, forget equity markets. Equity markets trade on momentum. They trade on all kinds of different crap, okay? Look at the bond market. The bond market is the one that's really reacting to this information today. So the bond market is sending a troubling sign. And I do think stocks like a Tesla that are so interest rate sensitive, not just the business, but the actual customers of the business, I think you're getting an indication here that rates are going to be higher for longer. The Fed may actually need to raise rates again. I think that's what Tesla stock is telling you, because I really don't have another way to justify what's happened with Tesla stock. Sure, have you seen downgrades, price target reductions? Sure, are people, negative about the EV market? Of course, but a 35% decline in 2 months, that's egregious, okay? And you have to think to some degree that's pricing in a more aggressive Fed. Now, again, I don't say this to scare you, but you're definitely on a crash watch here with this data coming in so hot. I mean, all of your inflation reports, you can't ignore it, even if the markets are going to ignore it. I think the markets are wrong, and I think the bond market is right. Bond market selling off like 1.5% in a single day means equities should be down something similar to that. Now, retail sales month over month also came in today, and really there's not a clear narrative out of that one as well. Last month's retail sales were revised from negative 0.8 to negative 1.1. So last month's retail sales, or January's retail sales, came in worse than expected. Month over month retail sales for the month of February, the number we just got today, came in at positive 0.6%. So it's not like super negative, right? It's still positive in February. That's not enough to signal the Fed should be cutting rates. It's also not, maybe hot enough to support that the Fed should be raising rates. I don't think you really get a clear narrative out of retail sales data. It just didn't come in hot or, super soft in either direction. But PPI, on the other hand, that's a rough number. If you just annualize that 0.6 times 12, you're at 7.2% PPI if 0.6% were to last every month for the next 12 months. That supports maybe the Fed needs to start raising rates again, or at least keep that optionality open, in which I don't think the markets are priced for that at all, considering where the S&P and the NASDAQ are. I mean, take a look at the NASDAQ and the S&P. Like, it's ridiculous. You've been on a very historic rally to the upside. We're definitely not priced for the optionality of a rate hike. And I think that is problematic when it comes to Tesla. And we'll talk about that here towards the end of this video, what that could actually mean for Tesla stock over the next, coming weeks or so. We do have some catalysts coming next week in which we'll break all of this down a little bit more in depth with my actual expectations in the next video. I do want to go over your Tesla news today because there is some Tesla news and I want to give you all of the data as well. But I will tell you, take a look at the NASDAQ. This is the only thing that really matters right now, in my personal opinion. It's this channel here on the NASDAQ. You can do the same thing on the S&P. You've basically been going straight up. You did bounce right at this line today, which I find very interesting, really confirming this channel is still intact. Like, you bounce right at this level today. I don't know what's going to happen here in the last hour or so of trading. I have to start making these videos before the end of the day to get them out at 4 p.m. So maybe the last hour or so of the trading day today could be negative. It could be really positive. We'll have to wait and see. But if you close under this uptrending line, this line right here where my cursor is, then you're in for a bigger problem. Okay, now even here in after hours, we are going to get some earnings coming out. Now, I've talked about the earnings before for today. You do have Adobe, Blink, and Ulta Beauty. Adobe is a very interesting company because Adobe's obviously not deemed like AI hardware. They're not selling GPUs. Adobe is more your beneficiary, maybe, to AI. So depending on what Adobe says, that may give us an indication of how other companies may be monetizing AI, like a Google or an Amazon or a Microsoft. And the problem here is if Adobe has bad earnings, then it's pretty easy to draw the conclusion that maybe other companies are not seeing good returns from their AI investments right now. And if they're not seeing good returns from their AI investments right now, their purchasing of GPUs, then maybe that means CapEx budgets slow down, and that could be bad news for Nvidia. And lo and behold, take a look at Nvidia today. Nvidia is down about 3%. And Nvidia is a whole other can of worms, let's be honest here. Ever since you got this big 5.5% down candle when Nvidia just gave up last Friday, it's been kind of sideways trading here. I think you're going to need a lot of good news or some kind of momentum again in the stock to get back above that prior high of 974. Could the stock trade sideways here for a period of time? Of course it could, but I don't think you're breaking out to new highs here unless there's something new, something good that justifies a large breakout from here. This was a big shift of momentum, and we have seen Nvidia really start to have some rough days, like today, down almost 3% ever since that big reset last Friday. So long story short, in this entire rant, I think the bond market is snitching here. And I think the bond market is really what you want to be looking at. Forget the equities. I don't care if today's a really good or really bad day in the last hour or so of trading. It's all about the bonds. The bonds are usually correct, and the bonds are saying today's stocks are going lower from here. Now, Tesla's stock is officially the worst performing stock in the S&P 500 to start 2024, and analysts say it has further to fall. This is the news that really sent Tesla's stock down yesterday. It was Wells Fargo analyst Colin Langan said Tesla is a growth company with no growth, and he assigned an underperform rating to the stock with a $125 price target. That caused Tesla stock to fall 4.5% yesterday, and arguably could be the reason Tesla stock is down another 4.5% today. It's kind of ironic that one of the worst analysts on Wall Street can have such an impact on a stock like Tesla. Take a look at this. You could do better than this analyst by putting on a blindfold and throwing darts at the Russell 2000. Okay. Colin Langan, this analyst with Wells Fargo, is ranked number 8,321 out of 8,746 Wall Street analysts. He has a success rate of 45%, less than a coin toss. And he has an average return of -6%. And yet people listen to this guy and his opinion on Tesla. That's I think that just shows how washed out the sentiment is in Tesla stock right now. Nonetheless, pretty ironic, huh? We did get some news, or I guess not news, not official from Tesla, but there is about 300 Cybertrucks spotted today at Giga Texas. Now, this is by far the most Cybertrucks we have seen, really suggesting that the ramp of the Cybertruck is going smoother than expected. That means the Cybertruck could be less of a cash burn or cash burden to Tesla and maybe help to actually bring in some more incremental revenue for Tesla, because let's be honest, there's probably 1 million Cybertrucks that are actually waiting to be delivered right now to customers in pre-orders that are actually going to be fulfilled, and people are actually going to take delivery of their Cybertruck. The quicker you can ramp that, the quicker you can increase sales that are literally just waiting to be sold. It also looks like FSD Beta V12 12.3 is rolling out to more people. Elon Musk told Giga Berlin employees yesterday that the Tesla Semi will likely be produced at their factory. He said, quote, "I think it makes sense to produce the Semi truck in Europe in Giga Berlin." Volkswagen on Thursday held out the prospect of launching an entry-level electric vehicle by 2027, with Volkswagen's brand chief Thomas Schaefer saying the company would decide in the coming weeks which model to move forward with. And yeah, that's 2027. Hopefully Tesla has a lower price model that is crushing everyone else by then. Nissan is considering seeking a business partnership with Honda to collaborate on electric vehicles. The Nikkei reported that Nissan and Honda could work together on electric vehicles to better compete with Chinese rivals. We did get a new AI investor sentiment survey that came out today. What's interesting here is bullish investors dropped back to the same level you were at roughly at the end of February, down to about 45.9%. Neutral investors seen the biggest jump from 26.5% to 32.2%. So the bulls basically just went to being neutral, and the bearish investors pretty much are staying the same for the last 3 weeks now at about 21.9%, which suggests there's potentially more downside from here. And maybe this even sets you up for a fall heading into tomorrow and into next week's major catalyst. Again, we'll talk about those in the next video. Tesla's global inventory numbers shooting up for the Model Y. Not exactly sure what's going on there, but shooting up almost 3,000 vehicles. That's a huge jump. All of your other models are ticking up at least a little bit, but nothing even close to the Model Y, Model X, Model S, and Model 3 upticking by about 50 vehicles or so apiece. And yeah, something's going wrong with Google Trends data here. Take a look at that. Going straight to 0. This is obviously not correct. The last we knew, the Model 3 went from 36 to 39. The Model Y stayed at about 34. The Cybertruck went from 28 to 29, and the Model X went from 9 to 10. And Tesla continues to run about 3,000 different ads with Google. The percent of stocks today above their 50-day moving average is getting slapped in the face, down about 5.2%. That's a big move lower after you have been trending upwards. Usually this is a sign of more downside to come. I'm honestly surprised the S&P and the NASDAQ are not down a lot more than they are today, considering even what, again, you're seeing in the bond market, but that could set us up for a decline coming tomorrow. It's also worth mentioning that you have trillions of dollars that will be expiring in the options market via quad witching tomorrow, and that could add to volatility, even though it historically does not. I think this time could be a little bit different, given next week you have big catalyst, and the data that we have gotten this week has just been so bad. And in some breaking news that just came out, UBS maintained a neutral rating on Tesla, and they have lowered their price target from $225 per share to $165 per share. That's likely another reason why Tesla stock is trading lower today. Algorithms are eating this up. And I'll just tell you, I mean, it's popular right now to be negative or bearish on Tesla, whereas you're really just resetting the expectations. So expectations are falling through the floor right now, and that sets Tesla up in a more than optimal position in 2024 to beat the estimates, to give you good news that is not priced into Tesla stock anymore. And I don't really think much has changed with the business trajectory. If anything, we're seeing hundreds of Cybertrucks in Giga Berlin's outbound lot. I mean, that's a positive development we've seen in recent weeks. The new iterations to FSD. There's been a lot of positive things. Sure, have there been negative things? Of course. But I think it's more just popular to hate on Tesla right now, more than the situation has actually materially gotten worse since Tesla's last earnings. Option activity today in Tesla, well, quite high, at least so far. You have seen 1,026 orders or different trades from hedge funds and institutions, totaling $840.3 million with a positive order value of 25%. So quite bearish, at least so far today. And it does look like there's a lot of shorting activity in Tesla stock today, with cost to borrow fees now at about 10%. The higher the cost to borrow fees, typically the more shorting that you are seeing. And I will tell you right now, the situation does not look great for Tesla. I expected to see more support and kind of a bottom in this crash in Tesla around 165, 164 or so, this downtrending line right here. That's not happening. So what does that mean? You've just broken under this important level. You don't have any support until you drop to about 150. And 150 is just really a psychological level of support. I mean, you could fall really to about 147. That would be the prior gap up that you've seen back here on January 26th. Now, let's say the markets do actually crash from here. The Fed indicates they may have to raise rates again. Well, it could get even worse than 140 or 150. Tesla's RSI is back to about 27.4, which is very oversold. And the MACD, well, I don't have it pulled up here. I'll pull it up, and that looks pretty dang bad as well. So I do think you're probably going to get a better buying opportunity in Tesla. And in my opinion, that's exactly what this is. Let me know what you think about all of this information down below in the comment section. Do you think this sell-off in Tesla is justified? Meaning, since last earnings, have we gotten enough, I guess, bad news to justify where the stock is now at? In my personal opinion, we haven't got much as far as new bad information. So with that being said, let me know your opinions down below in the comment section. Do not, and I mean do not in your interest, miss the video coming out at 8 p.m. tonight. We need to go over some things that are very important. Hit the like button, subscribe to the channel. Thank you for watching. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Most importantly, have a fantastic rest of your day. Regardless of what Tesla stock is doing, remember why you're in the stock. What is the long-term thesis? What do you think Tesla can become? Has anything changed? You gotta remember these things, or think about these things, reevaluate these things. Thank you for watching. I will see you in the next one.